Hello, it's Vencesław from binaryoptionsupport.com, and today I'm going to be talking about diversions and how you can use them into your trading sessions. So first, this is a regular USD chart, USD JPY chart. It should do the work. I haven't taken a look at the chart before, but diversions are pretty often and they can be found pretty easily, so we should not have any problems finding some today. So let's start. Before you start your trading session, of course, you should check the economic calendar and make sure that there are no major news events which can ruin your chart analysis, and if there are any, just avoid them or implement them in your trading session and trade within the direction of the data release after the news is released, of course. Let's start. What I like to do is I not only for this strategy but for everything I really like to give some structure of the charts before I start trading. So I usually draw those support and resistance lines before even I start trading, and when you start drawing some support and resistance, you'll be actually really really amazed how those lines are respected in the past and in the future. It's just that the price action, those are spots where the price action is expected to react. It's the places where the next thing is going to happen. So it's really good to draw the support and resistance. And as I said, you will be amazed how those lines are going to be respected in the future, and they are also respected in the past. As you can see here, we have a lot of touches, obviously. A resistance, then breakout, then acting like support, then broken, then again a resistance, then support, then here again a support broken, a little bit of resistance here, a little bit of support here again, and probably in the future it will be acting, this line here will be acting again as a support and then as a resistance. So once you draw some support and resistance, for diversions you need to use any type. Actually, you can use any type of oscillator, MACD, CCI, RSI, stochastic, whatever you like. For this, in this example, I'm going to be using the CCI, and I'm going to be adding additional levels, 200 and minus 200. So this is the indicator. It's representing, it's often the traders are using it as a trigger. It represents oversold and overbought markets. In this case here we have overbought, and down here we have oversold markets. So it's just additional confirmation that that can be used by the traders to stronger their signals, to give it more probability. So we'll be interested particularly in those areas here between the 200, the 100 and 200, and of course the down area also. Of course, you don't have to make it like colorful or anything. It's just I'm going to make it for you to be more visible. And of course, close to those levels is also good, but if, for example, we have a signal like in the middle of the CCI, it's not a good one, maybe a fake one, or maybe some kind of spike caused by a news release. So avoid trading signals coming around the zero level of this indicator, or any other, of course. If it's in the middle of stochastic, it's also a bad signal. So let's go back to our strategy. What are the diversions and how you can use them? Well, there are two types of diversions, negative and positive one, and it's like places where the price action is in correlation with the indicator, in this case with the CCI. So I'm going to start giving some examples, and you will be amazed how good those signals might be. So as you can see here, this is MetaTrader 4, so the signals will be a little bit ugly. So as you can see here, we have a price going up, and the CCI is clearly showing a down movement. So once we see such area, we have to, of course, search for additional confirmation. Only the diversion is not enough. Well, we have like three components here. The diversion, we need to recognize the actual diversion. Then we need to see if it's in overbought or oversold market, and this is actually a negative diversion, the first type, and the positive is vice versa when it's in the bottom. But this is a negative one. So first we need to recognize the diversion. And then we need to make sure that it's in this case in overbought markets, and then we need to find a good pattern formation or price action or support and resistance, a place where we will be able to enter our trade. So in this case here we have this is our bar here forming our minor resistance, and then we have a reversed hammer. Well, it's not a perfect reverse hammer because the perfect one does not have the bottom shadow, but it indicates that it might be a reversal here. So this is our confirmation here. So this is going to be our actually first signal here. Okay, sorry about this one. So as you can see, we have a pretty good setup here, and we can take the signal, and actually you can see that the market is reversing here. So let's move forward to our next diversion. Here we have a pretty cool one actually, and it's not like a big movement, but we can trade this one. As you can see, we have the same situation, again a negative one, and here we have actually a good pretty good resistance. So here this shadow, this touch of the resistance is where we will be able to take our signal. Okay, I'm really not good at drawing those circles. And we have plenty of time to in the money this signal, and of course we have here another movement to our resistance here, and then a doji, and then a reversal. But till we go up here again, we'll be long gone, and we'll be long in the money this signal. So it's a safe signal and nothing to worry about. Let's move further. Okay, this is I think a good one. So as you can see, well, it's starting from here actually, but you don't have to be perfect, of course, in your drawing. It's just the importance here is to understand the signal, and to find something to and to find all the conditions, and when you recognize everything, it's just going to be easier and easier for you to find those diversions. So in this case here we see the diversion, and actually if we enter anywhere here on this strong support, actually it's pretty strong support here. As you can see, we have many touches, and here is acting like a resistance. Here we have a support, and excuse me, yeah, MetaTrader is really not cool for drawing, but I'm used to it. Here we have a resistance. Anyway, once we recognize this diversion, we just need to confirm it with something. In this case, we have double doji. Even if we are really patient and we wait for this doji to close, and then we have another doji, so we have plenty of time to open the signal and in the money it. And actually everything under 104.150 is in the money. As you can see, all those shadows and everywhere from this, excuse me, let me draw it first, from 104.15 to 104.04 is in the money. So no matter where we enter, we'll be in the money in this signal for a pretty long time. Let's move on. Okay, here we have pretty good example also. As you can see, again a negative diversion, and again here we have a resistance, but we don't know about the diversion yet. So here in this area we know about the diversion, and every single strike rate between, let me draw it. Okay, it's not really pretty, but anyway, every single strike rate between 104.20 and 104.15 is going to be in the money, so it's pretty safe signal. And let's move on. This is a positive here, positive diversion, pretty cool signal also, and it starts, excuse me, starts like maybe here, but you're getting the point. And as I said, it's not really easy to draw on MetaTrader because it has like all the engine and everything. So this one here, this is a positive diversion, and as you can see, actually if you're not seeing, everything is happening on those support and resistance areas, so it's pretty easy to confirm everything. And here we have a lot of touches, so if we actually realize about the diversion here on these candlesticks at 1600, sorry, so we can get strike rate around 103.24 down to 103.15. so everything in this area here, everything is going to be in the money. As you can see, pretty cool reversal. So I'm not sure, maybe I have missed something. Let me check again. Anyway, you're getting the point. So everything is looking pretty good, I believe, with this with all those examples. So you're getting the point that the diversions are really strong and they're easy to find, and the strategy is with 3 components. So you have additional confirmation from the CCI overbought oversold levels, and from the price action, and from patterns, and from support and resistance. In this case, you can combine everything together. Here we have the patterns, the support and resistance, and everything. In some signals you have only support and resistance, and here even if we have candlestick formation. Here we don't have candlestick formation. We have one up here, but it's actually not a diversion. But anyway, here we don't have anything, but we have the strong this is the top resistance here of the whole movement, of the whole uptrend movement. So it's clearly a resistance, and we can easily take a signal here and in the money in the next 1-2 hours. In terms of expiries, I'm suggesting to trade between 1 and 2 hours expiry, because we want to catch even the small diversions like this one here, and we're here 2 hours in the money, and third hour it's out of the money. And then if we trade really long, like 5-6 hours trade, we'll be in the money. But and actually all the signals, most of the signals, you can trade 5-6 hours expiries. This is pretty solid, because longer expiries and signals coming from higher time frame, they're more solid, they're more accurate, and in many cases the patient traders, the turtle traders, well, in forex they are called turtle traders, but to be honest, turtle traders, they trade like monthly, yearly trades and so on. But in binary options we can call turtle traders traders who are taking more than 1 hour, 2 hours, 5 hours trades, because it's not common in binary options. Most traders in binary options trade 15 minutes, 30 minutes, up to 1 hour expiry. So everything above is a little bit let's say long term. So if you learn to be patient and you can wait for those diversions, and you can execute the trades properly, I'm sure that you can easily go up to 80% accuracy, because as I said, higher time frames and more components and conditions added to your strategy are going to provide higher probability signals. So keep that in mind and try this easy to follow strategy. I'm sure that you like it. And of course, before you start using it on the charts with real money account, with your main account, use it on demo account for a few weeks. Maybe go back in the charts, find all those diversions, make sure that you understand the concept of the strategy. And once you feel ready, once you stay for 1-2 weeks above 70% with the demo account, I'm sure that you will be safe to switch on real money account. And of course, use your budget wisely with your real money account. Always use around 5% of your overall capital to trade with, so you'll be safe trading, and when you have bad days, you'll be overcoming it easily. So thank you for watching this strategy. I hope you like it. Don't forget to subscribe to my channel, and of course send me an email. I will be sending you some free indicators, some free automated signals indicators for MetaTrader 4, which are designed by me, and they are based on reliable strategies, so you can use them and implement them also in your training session for more signals. And of course, in general, you'll be making more money, because more signals means more money. So if you want the indicators, just subscribe and send me the email. And again, thank you for watching this video. See you soon with the next one.